This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Economic headwinds have yet to significantly erode the world's demand for oil, top oil traders said at the Argus European Crude Conference in Geneva on Tuesday. The forecasts by senior executives of the world's main commodity trading houses may buttress the case for more resilient oil prices after recession fears sent them plunging by around a quarter in the last 3 months to near $90 a barrel. All the different factors suggest, yes, we may be heading into a slowdown, but it will be shorter and shallower than people are expecting, Trafigura's chief economist Saad Rahim said.
The White House has ruled out any ban or curbs on natural gas exports this winter, in a bid to help alleviate energy shortages in Europe, according to 2 people directly involved in the discussions. In March, U.S. President Joe Biden committed to deliver 15 billion cubic meters, BCM, more of liquefied natural gas, LNG, to Europe following Russia's invasion of Ukraine and has already surpassed that goal. Further White House analysis has only cemented support for ongoing exports, the sources said, although rising energy costs and a colder than expected winter could test Biden's commitment. A ban has not been seriously considered, said a U.S. official.
Moving on to the top news in the energy sector.
Global gas markets are expected to remain tight next year as Russian pipeline gas supplies dwindle and gas demand falls in Europe in response to energy-saving measures and high prices, the International Energy Agency, IEA, said on Monday. Natural gas markets worldwide have been tightening since 2021 and global gas consumption is expected to decline by 0.8% this year as a result of a record 10% contraction in Europe and flat demand in the Asia-Pacific region, the IEA said in its quarterly gas market report. Meanwhile, global gas consumption is forecast to inch up by just 0.4% next year.
Chinese refiners are likely to boost refined oil products exports in the last 2 months of 2022 and into early 2023 after receiving the biggest allocation from Beijing this year, trade sources and analysts said on Monday. The increase in Chinese exports is likely to help stabilize global oil markets and partly replace supplies from Russia, which will be hit by European Union embargoes in coming months. It also allows the world's number 2 refiner to tap excess refining capacity and boost exports when its economy is struggling for growth after narrowly avoiding a contraction in the second quarter and the decline in the yuan to a 14-year low. Next, we have the top news in metal markets. Industrial metal trading volumes have fallen across the world and may slide further as economic threats from higher interest rates to the war in Ukraine send buyers, especially in leading consumer China, to the sidelines. Aggressive interest rate hikes have fueled real concern about impending recession, while confidence is also still reeling after wild price swings during the first quarter following Russia's invasion of Ukraine. Trading volumes of copper have tumbled by up to a third on global commodity exchanges so far this year, and those in most other industrial metals also slumped, with nickel hardest hit.
Copper prices rose on Tuesday as a softer dollar triggered fund buying, though gains were capped by rising inventories and a worsening demand outlook, particularly in top consumer China. Benchmark copper on the London Metal Exchange (LME) was up 0.3% at $7,533 a ton at 13:28 GMT in subdued trade owing to Chinese holidays. Prices of the metal viewed as a gauge of economic growth have dropped 30% since scaling a record peak in March. The dollar slipped after data showing that U.S. manufacturing expanded at its slowest since May 2020 raised the prospect of less aggressive increases to U.S. interest rates.
We will now look at the top news in the agricultural sector.
Indonesia, the world's biggest producer of palm oil, may extend an export levy waiver on the edible oil to the end of this year, its chief economic minister said on Tuesday. Indonesia started waiving levies imposed on exports of palm oil products from mid-July to help reduce a stock glut that accumulated after a 3-week export ban in late April, which was designed to stabilize local cooking oil prices. The levy waiver policy is currently scheduled to end after October 31st. The plan is for an extension until the end of the year, Minister Erlangga Hartarto told reporters. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.